Today, we're going to dive into one of the most crucial tax benefits for U.S. expatriates, the Foreign Earned Income Exclusion, also known as the FEIE. This exclusion can significantly reduce, or in some cases eliminate, your U.S. tax liability on income earned abroad. Let's unpack this complex topic in detail, discussing its eligibility, calculation, application, and potential implications. I think this is probably the most powerful tax benefit out there for the average digital nomad. I've spent years implementing this myself, and so you're going to want to pay attention if you don't know everything there is to know about the FEIE. So let's kind of crack right into it. So the FEIE, Foreign Earned Income Exclusion, is a provision under the U.S. tax code that allows qualifying U.S. citizens and resident aliens to exclude a certain amount of their foreign earnings from U.S. federal income tax. This is designed to prevent double taxation for Americans working overseas, where they might be taxed by both the country they're living in and the U.S. So that was the original idea, is helping you with double taxation. So let's talk about eligibility for the FEIE. To qualify, you must meet one of two tests. One is the bona fide resident test. This test requires you to be a bona fide resident of a foreign country or countries for an uninterrupted period that includes an entire tax year. Here, bona fide means you've established a home in the foreign country with an intent to remain indefinitely. This isn't just about physical presence. You must also show social and economic ties to that country. For instance, you must have a long-term lease, local bank accounts, or be involved in community activities. And then the second potential test is the physical presence test. This is, often the easier one to meet for those on short-term assignments. You need to be physically present in a foreign country or countries for at least 333 full days during any period of 12 consecutive months. Importantly, these dates don't need to be in one single year or calendar year. They can span across tax years, which is interesting. Most people don't realize that. And you can have multiple 12-month periods to choose from to maximize your exclusion. I would also say the physical presence test is easier to qualify for in the sense that you do not need to be a bona fide resident of another country. You simply just need to be outside the US. And it's also less likely to be audited, is what they say, because it's pretty clear cut. Either you're in the country or you're not. Whereas the bona fide residence test is more like, let's have you prove that. And so it's kind of more likely to get audited. So with those two tests out of the way, let's talk about what counts as foreign earned income. Foreign earned income includes income from personal services performed outside the U.S., such as wages, salaries, commissions, bonuses, professional fees for services, self-employment income, right? The key word there is earned income. It does not include dividends, interest, or capital gains. These are considered passive income. It does not include pension or annuity payments, including Social Security benefits. And it does not include pay from U.S. government employment or its agencies. Now, there are exclusion limits and inflation adjustments. The amount of income that you can exclude changes yearly. It goes up, adjusted for inflation. For the 2024 tax year, the maximum exclusion is $126,500 per qualifying individual. If you are married and filing jointly, and your spouse also qualifies, you can double this amount, potentially excluding up to $253,000. However, this exclusion is prorated if you don't qualify for the entire year. For example, if you qualify for half the year, you'd only be eligible to exclude half of the maximum amount. Okay? Now let's talk about calculating your exclusion. To calculate how much of your income you can exclude, you can determine your total foreign earned income for the year, calculate your qualifying days under either the bona fide residence or physical presence test, multiply the number of qualifying days by the daily rate of maximum exclusion. For 2024, this would be 126,500 divided by 365 days, giving you roughly $346 per day, roughly. Compare this to your actual foreign earned income, and you can exclude up to the lesser of these two amounts. So basically, if you earn like 160K, you would exclude the first 126K, but then you would be liable for that remaining, 160 minus 126, and you'd be taxed at the higher marginal tax rate. There are other exclusions and tax benefits, of course, that you can layer on top of this to further reduce your tax liability, but we'll stick to the FEIE for this video. So let's talk about how to apply for the FEIE. To claim it, you need to file a U.S. tax return, obviously, Form 1040, even if you owe no tax after the exclusion. You need to attach Form 2555, the foreign earned income form, to your return. This form requires detailed information about your foreign income, tax home, and how you meet the eligibility requirements, or the eligibility test. If you're self-employed, remember that FEIE reduces your income tax, but it does not affect self-employment taxes like Social Security and Medicare. And then let's talk about timing and filing. So there are extensions. If you're living abroad, you automatically get an extension to June 15th to file your tax return. However, if your tax home is in a foreign country and you're a bona fide resident, you can request an additional extension until you qualify for the exclusion, but you still need to estimate and pay any tax due by April 15th to avoid interest. There's also amendments. So if you didn't claim the FEIE in the previous years but were eligible, you can actually file an amended return to claim it retrospectively, potentially recovering overpaid taxes. I highly recommend using a tax expert that knows about the FEIE. Most US tax guys and accountants, they don't really specialize in the FEIE because, most of their clients are just normal US citizens living on the mainland. And so you really want to get sort of an expat focused tax guy to deal with this stuff. At MyLatinLife, we have a specific company that we work with. So if you want to claim the FEIE, we highly recommend using our guy or using some guy that just lives and breathes the FEIE, because it is a very significant thing. And most like liberty tax type of stuff, they don't know about this. Okay. So there's going to be a link in the description to become our client. If you work with us, we can start handling it. And you're going to save a huge amount of money on taxes, because we're talking, the taxes on 126K, it works out to about $20,000 a year, if not more. So it's really significant. So you really want to work with someone who knows how to do it right. Now, let's talk about a couple other considerations here. There's also something called the foreign housing exclusion or deduction. So alongside the FEIE, you might be eligible for the foreign housing exclusion or deduction. This allows you to exclude or deduct certain housing expenses in excess of 16% of the FEIE amount, up to a limit that varies by location due to cost of living differences. There's also the foreign tax credit, the FTC. You can't take a credit for taxes paid on income that has been excluded under the FEIE. However, for income not excluded or for passive income, the FTC can be a valuable tool to offset other incremental U.S. tax liability. Another consideration is state taxes. So the FEIE applies to federal taxes, but some states might not recognize this exclusion. You'll need to check your state's laws if you're considered a resident of that state. I know there's, I don't have it in front of me, but there's about 5, 7, 8 states that do not recognize the FEIE. I think it's Massachusetts. There's a couple. And so if you're living abroad, you don't want to be a resident of one of those states that doesn't recognize it. You want to do something we call the Texas two-step, which is essentially you change your state of tax residency to a zero tax state. And then that way you have no federal taxes and then also no state taxes. If you need help implementing this, again, link in the description, become a client, book a call. We help people implement the Texas two-step all the time. Now let's talk about potential pitfalls and criticisms. So one is documentation, keeping meticulous records of your travel time abroad, income sources, and expenses, especially if your eligibility might be questioned in an audit. Another pitfall is changes in tax law. The FEIE has been subject to legislative changes in the past, and there's always the possibility of future modifications that might affect its benefits in the future. I know right now Trump is talking about moving away from citizenship-based taxation to residency-based taxation. He promised that in a video during his campaigning, during the election, but there's nothing official yet, so we'll see what happens with that. Let's also mention the complexity. I think it is pretty straightforward, but the rules around FEIE can be intricate, leading to potential mistakes or missed opportunities if not handled with care. For instance, miscalculating qualifying days or misunderstanding what counts as foreign earned income can lead to IRS scrutiny or lead to you just bungling the whole thing. For example, days in international waters count as days in the US. So if you're on like a boat in international waters or something like that, that still counts as days in the US. Okay. And then there's economic and ethical considerations. There's debate about the fairness of these tax exclusions. Critics argue it might encourage tax avoidance or benefit higher income expats disproportionately. I wouldn't pay that too much mind. The thing is, this is an incentive. It's like the US is incentivizing you to be abroad. They want US citizens to be out there in the world doing business, representing the US. And that's why these incentives exist, because they want you to be out there. And it's pretty powerful, because if you save $20,000 a year on federal taxes, it's almost like the government's paying you $1,500 a month to live abroad, which is pretty cool. So let's talk about maximizing the FEIE and how to get the most out of it. One is plan your move. If possible, plan your move abroad to coincide with tax years to maximize your qualifying days and also just make things as clean cut as possible. Also, there's this idea of the tax home and understanding your tax home. Your tax home is where your principal place of business is, not necessarily where you live. And there is a mention in the tax code around FEIE regarding your tax home, particularly in regards to the bona fide residence test. And this can be crucial for people who commute frequently or people who kind of have multiple bases. So the tax home is an important consideration here. And to maximize the most out of this thing, we really recommend consulting professionals, given the complexity, given how much money you can save if you do this correctly, and how costly an error can be if you do this incorrectly. We really recommend working with a professional to implement this correctly. In conclusion, the foreign earned income exclusion offers a significant tax advantage for U.S. citizens living abroad, but it's not without its challenges. Proper application requires understanding eligibility tests, precise calculations, and staying updated with tax law changes. While it can greatly reduce your tax burden as part of a broader tax strategy that might include considerations like the foreign tax credit, state taxes, and planning for eventual return to the U.S. or long-term expatriation. Remember, tax strategies are personal and should be tailored to your specific circumstances. Always consult with a tax professional to navigate these waters correctly. Thanks for watching. Like this video if you found it useful. Subscribe for more detailed tax insights and videos to help Americans live abroad and thrive abroad. And let's also discuss your experiences in the questions, any questions you have in the comments below. We'd love to hear from you. And we'll catch you in the next video.